welcome to our market update. So every week we get together, we share what's happened in the market. Usually by the 20th of the month, I have all of the major markets in Texas updated. So I'm excited that we're at the 25th and I've had all the data for a full week now. So we're going to be reviewing what happened last month in September 2022 versus September 2021. And the way that I'm going to break this down is I'm going to go through the Texas roll-up first. So we're going to look at what happened in all of Texas last month, and then we're going to break down each one of the individual markets. So what we're experiencing right now in real estate is what? Say louder. Someone said recession. Someone said inflation. What else? And who said that? Yeah, interest rates are going up. And is that a fair assessment? How about interest rates have more than doubled in 6 months? Is that a big deal? That's a huge deal. Are we now back to the interest rates that we had when I first started investing back in 2003? The answer is yes. How does that make you feel as a home buyer when all of a sudden your payment went up on the same house that you've been eyeing since it went on the market? In 6 months, your payment for that same house with your same down payment went up $1,000 a month. How does that make you feel? Someone said frustrated. What else? Somebody said what? Not wanting to buy. Yeah? Is that how buyers are feeling? Yeah. You know, there are some times in real estate where it's kind of like a flow, right? So I think things are just kind of flowing, you know, maybe a little bit good, maybe a little bit bad. There's some times in real estate where it's like a on-off light switch. What has the last few months felt like a little bit? A little bit like a light switch, right? So, and in fact, I was reading an article in the Wall Street Journal today, and it said that sales are down 27% for all of the United States. In Texas, last month they were down 16%. But the rest of the United States, which is pretty typical for us, is not doing as well as we are here in Texas. But sales are down 27% year over year, which they said was reminiscent of the, and more than the what? What we experienced in 2008, 9, and 10, okay? Now, but what's different this time? What's different this time? What is so very different this time? Interest rates are actually about the same as they were in 2008, right? Inflation? Someone says the dollar stronger? Unemployment's low? Yes, that's the huge difference, right? Everyone has a job. Everyone who wants a job has a job right now, right? That's one of the big things that's different. What's another situation that's different when it comes to our sellers? Say it again? They don't have to sell. In 2007, 8, 9, what did those people have to do? Sell. Why don't they have to sell now? They've got more equity, less people are leveraged, so there aren't those 80-20 loans anymore, right? Yeah. So now you're saying most people can't afford that $1,000 a month increase. So
let's say I was thinking of selling. So I sell my house for $400,000. Even if I own it outright, I go and buy an $800,000 home. Wait a minute. That means I now have a mortgage payment or something like that. I can stay where I'm at with either a fixed rate interest or no mortgage or whatever. Plus, you have a lot of people coming into states like Texas, Florida, from the coastal cities that are very
cash rich, yes, yeah. So what's different is a lot of the people who defaulted before had zero skin in the game, right? And now everyone who's gotten a mortgage in this market cycle has plenty of skin in the game, unless they're FHA or VA buyers, which there are plenty of those that are just putting the absolute minimum amount down. The big thing now is the interest rates are so low that, you know, even if they were to sell and go rent, their rent is actually going to be higher, right? Versus before, if they were to sell and go rent, their payment, right, would actually be lower. We didn't have a lot of adjustable rate mortgages this time around, so there's no pressure on that. We have high employment, right? So people aren't losing their jobs day after day. So this is a different market, but we have something that we did not have in that market, which is the Fed ruining it. Did I say that out loud? Yeah. Okay, yeah, I did. So the Fed is coming in and checking the housing market, right? And it's I'm trying to think, like in basketball, like who was like, you know, the most serious checker? Karl Malone. I don't know if like I'm like that's the last time I watched basketball. So, you know, but Karl Malone, like, you know, for those of you guys who know, he was basically going to punch you in the face checking you, right? So, and I feel like that's a little bit what Jerome Powell is doing as he's going full Volcker to make sure he brings down brings down inflation rates. And he's doing this at the expense of the housing market and possibly the entire economy. So he's somehow figured out in his head that bringing down inflation is a bigger priority than, you know, keeping the economy, you know, going and the housing market going. And when you slow down the housing market, it has many ripple effects to what? What do you buy after you buy a house? That'd be a dishwasher, that would be a washing machine, that would be a new refrigerator, that would be, you know, everything that they sell at, you know, Bed Bath & Beyond, Target, you know, insert, item here, right? So it's causing a ripple effect. And what I loved about the last Fed meeting is what? What did they say at the last Fed meeting? Yeah, you know, maybe we're going a little too fast, right? Maybe we need to slow down a little bit. Now that's not going to stop them from a 0.75% raise in about, 6 or 7 days, right? But I think it's going to stop them at some point, slow them down at some point soon, right? Because it's funny, it's like, you know, you're chasing, you know, it's like, has anybody, you know, there's that saying, like, if you really love someone, let them free, set them free. So he's chasing inflation, and what is inflation doing? It's coming back, because what's a big part of inflation? Housing. So what are they doing with housing as inflation, as interest rates go up? It's increasing the price, which is part of CPI. And even with rent, because people are now not buying as much, what are they doing like crazy? They're renting. So what's going on with rents? They're going up. So it's like every time he inches that one up, well, then the thing that he's trying to, you know, get, he's not setting it free, right? So it's making that gap even wider. So I think there's some interesting things to come. Texas market, last month closed sales were down 16% year over year. The total active inventory has increased from 57,000 units to over 90,000 units. The good news is what's happening with our prices? They continue to go up. But here's the little, you know, so when we do a market update, and when National Association of Realtors does a market update as well, they look at year over year based on the month, that same month last year. So it is up. Sales prices are up versus where we were in September of 2021. But sales prices are not up versus where we were in May of 2022. So if you look at May of 2022 to September and what's going to be October numbers, those numbers are going down in a typical period where you would see those numbers going up, right? So this is my caution to you. So this is your big takeaway that I want you guys to get. When you guys are doing your analysis for your buys, fix, and flips, what are the comps that you are using? What are the comps that you are using? Are they comps from 9 months ago? Are they comps from 6 months ago? If they are comps from 6 months ago, and if the comp said multiple offers above list price, you know, final offer by Friday, are you using the right comp? If it was a sale in April, May, even June, you're using the wrong comps. So what does that mean if you're using the wrong comps? How does that translate for you in your offer price? You're over offering, you're overpaying. And what happens when you overpay? You lose money as a real estate investor. It's kind of like a 1-for-1, right? So guys, when you are looking at properties, and this can be very confusing in this market that we are in right now. What I will tell you is look at what was selling when it was up 10% versus the same time last year. Do not look what was selling in January, February, March, April, May, and even a little bit in June. Because those people who closed in May, when did they lock in their rates? Before rates started to explode up. So please, 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 because as real estate investors, we make our money on the buy, right? We got to buy it right in order to make money. Please use the right comps. So I want you to see this number for average price being up year over year, but also know how to make it relative to you in your own business. Does this make sense? Does this compute to everybody? Okay, good. All right, for Houston, the average price, $415,000, up 11.6 versus where it was last year. Closed sales are down. They're down 15.5% in Houston. I'm sorry, they're down 17% in Houston. Pending sales, our closest leading indicator to what closed sales will be next month, down 15.5 as well. What do we see in Houston? The leases are up 19% and the lease prices are up 7%. So that's where everyone is going. Everyone is, I kind of joke like, it's like being a kid on a playground. And you know, when another kid does something rude, you know, to one of the children, what does the kid do? They pick up their toy and then they leave, right? What have buyers done? They picked up their toy, which is a down payment, and they've left. And where have they gone? To rent. Which, how many of you guys own rental property? Winning! All right, okay. For the rest of you guys, you need to work on that. So Austin, average sales price, $594, up 5.6% versus where it was last year. Closed sales last month were down 18.5%. Pending sales are down, getting closer to 30%. So Austin seeing a bigger hit when it comes to reduction. Close to ask price, close to original list price. This same time last year, houses in Austin, for example, were selling at 106% of list price. So it was listed for $100,000, it was selling for $106,000. I know there's no such beast that's selling for $100,000, but just to give you an idea, now things are selling for 95% of the list price. Now, don't think, oh yay, now I can go to the MLS to get deals. Sir, are you listening? Instead, think, no, you got to still get them off market because your deal is not on the MLS. In the San Antonio market, the average price $389,000, up 12% versus what it was the same time last year. Days on market have gone from 27 days to 42 days. Is 42 days normal? It's very normal. It's if you have perspective. If you just started looking at real estate, a month ago, it's terrible. But if you've been investing for a while, you'll realize, gosh, 40, 60 days, that's pretty much normal. Closed sales down 13% versus where we were the same time last year. We've increased our months of inventory from a 1.7 month supply to a 2.8 month supply. So basically what that means is if we stopped listing houses today based on the inventory that we currently have active in the field, after 2.8 months, we would be completely out of an inventory of homes for sale, okay? For those of you guys who are like, okay, well that explained what it is, but I have no idea what it means. What that means is, and I want to make it relative to you. So over the last 40 years, our months of inventory has averaged around 6 months of inventory, okay? So historically, it's been, if we stop listing houses today, in 6 months, we would be completely out of supply of homes for sale. So a lot of people are worried, like, oh my gosh, the sky's falling in real estate. But the truth is, because of these very low interest rates and not having subprime borrowers like we did before and having high employment, we're going to see probably inventory hold pretty steady. What does that mean for our prices? They're going to also stay pretty steady. Now, they came down from the high in May, but I think as we kind of continue to look at them year over year, they're going to be very strong for us. Leases also up in San Antonio, up 15%, and lease price up 7%. For the Dallas-Fort Worth market, average price up 11% to $482. Sales down 17%, pending sales down 20%. Leases in Dallas are up 22%, and the lease price in Dallas up 8%. Guys, did that help you get an idea of where we are in the market? Okay, 2 of you really know what to do next. Great. I love it when I'm breaking through. Thank you for that. So